Okay, Sunday 22nd of January 2012, just going to do a very quick roundup of a couple of charts. Friday, tricky day on the markets, top to bottom range, I think it was only about 6 or 7 points kind of down here. We started off the day just really going nowhere. You can see on better momentum we had all these bullish and bearish divergent signals, but right on the zero line here, just showing absolutely no conviction. I did think that the market was going to kind of play out this pullback to end of trend move on the 13,500 tip bar chart, and that's really what happened. So we'd broken into our uptrend a couple of days ago, pullback, end of trends kind of going off here. We knew that we were finding some kind of resistance up here. We had rainbow patterns at the top there from which we normally see some weakness kind of down here. So we got that weakness, kind of the support held, and we went and made those kind of highs, but it was pretty unconvincing. And you can see just the amateur patterns here, into those highs, kind of that initial mid-morning type of rally, and then we just sold off all the blue professional bars, kind of coming at the lows here. I actually kind of went long. I actually don't have my numbers in front of me, kind of around here. Was looking for a little bit more than the kind of cyclical resistance we kind of played out into 1310, and didn't get out there with 2 or 3 points in my favor. So I was kind of looking for a little bit more, didn't get it, and then I kind of exited right here on this amateur bar, losing, I think I was down like 3 1/4 points or something for the day. But you can just see how that was kind of the setup for this move. We'd had the blue professional bars kind of coming at the lows, 1305s was kind of holding. We test back down, it was a pretty severe test, into our amateur down bars kind of down here at the bottom at 1306, and then we had exhaustion selling, and we kind of rallied from there. That was the rally of the day, but extremely slow day, really kind of not much kind of good trading to be had. And this week's been a little bit like that, pretty compressed ranges during the day, and not had the kind of the decent trend type moves that we've had over the last several months. So hopefully we'll get a little bit more next week. In terms of other charts, just want to draw your attention to the rates charts and the bond charts, talking about this over the last couple of months, and I think this is really quite significant. In terms of bigger picture, what's happening in Europe and what's happening in the States. I mean, in the States there's no kind of pressure on the government to really think about their issuance of government bonds, because rates are so low, they're kind of covering their interest costs, and yes, the debt ceiling is kind of going up. There is there are murmurings about needing to cut things, but there's no great incentive or imperative to do it yet. However, what I see kind of lining up on the interest rate charts is we're at a historic, really important supercycle type low. And if you look at the weekly charts of the interest rates, we've had pullback to end of trends moves kind of go off. In this last week we got kind of confirmation of this with this week's trade. So here we go, this is the 5-year chart, pullback to end of trend. If we go to the weekly chart of 10-year, same thing, pullback to end of trend. And if I go to the weekly chart of 30-year, you can see it's a similar type pattern. It's not been a pullback to end of trend. I think we're going to kind of move here to a pullback to end of trend move on the 30-year charts. When you look at the daily charts, all of these you can see we've just been in this really basing pattern after kind of some extreme moves down to the lows here, leading into October, and we've just kind of been trying to find this bottom over here. Let's have a look at another daily chart here. This is 30-year. Same kind of thing, cyclical patterns here down at the lows, just finding a bottom kind of down here. Last daily chart on the 5-year, same thing, pullback to, well, dirty end of trend kind of signals here, pullback to dirty end of trend, and then kind of just some cyclical patterns. And this basing activity has been 5 or 6 month kind of activity over here. Now, what I think is going to happen is you start look at some of the monthly charts. So if we look at the 30-year on a monthly chart here, the activity during 2011 was played out by this downswing on the monthly chart kind of here, and we've got this cyclical support kind of due. I think that's going to come in over the next month or so here, and that's a really important level here. And I think the story for certainly the first half possibly of 2012 will be rising rates. So we'll have a cyclical kind of low kind of confirmed here. If we look at another monthly chart, this is the 10-year monthly chart, cyclical lows kind of already in. Again, the story out of 2011 was falling rates, and that lows kind of come in. And then lastly, 5-year on the monthly charts coming as well, cyclical low. So first half of 2012, I think we're going to play out rising rates, and we'll start to see basically I think investors are starting to see greater risk in sovereign bonds, and they want to be compensated for that. And potentially we could see kind of strength in the risk on trade equity markets, kind of copper, gold, all of those things could go up, and bonds could go down. If you look at the bonds kind of themselves, looking on a weekly chart of the US bond contract here, you can see we had this exhaustion buying into these highs, testing into these highs. Here has been in amateur up bars, weaker and weaker buying kind of going on. Now we're in uptrend on the weekly chart, so we've got to find a pullback to end of trend move. So over the next few weeks I think we will see the bond market kind of come off, but at some point we'll find a pullback level and strengthen from there. If we go to sorry, let me just show you the daily chart as well. You can just see that exhaustion buying, flush signals, bang bang, and then weaker and weaker buying going on here. Rambo patterns here, blue professional bars coming into that kind of 145 type level here, and we kind of sold off. And we look at on a monthly chart, we've got a pullback to end of trend sequence here with exhaustion buying, kind of extreme levels up here, and that's an amateur up bar right at the kind of going up into those highs. So that's kind of the picture there. Similar picture in a lot of the markets here. This is the weekly chart of 5-year. Rambo patterns up at the highs here after our exhaustion buying, bearish divergence signals coming in. Still got to find pullback to end of trend kind of sequence, but we could see this kind of weakening kind of going forward. And then on the 10-year as well, sorry, what was this? Yep. 10-year as well, Rambo patterns into those highs on the weekly chart. Got to see that pullback to end of trend sequence. So very similar picture across all of the bond contracts, and I'm just wondering, when this plays out, we could be seeing, the record lows could be in, and we could be seeing over the next 6 months this kind of topping out pattern playing out, after which could be really interesting in terms of, we've had a 30-year rally in the bonds, and interest rates are at record lows. The Fed's at 0 or 25 basis points. We've got 1, 2, and 3 percentage points rates for 5, 10, and 30-year bonds. I mean, this is record lows. And could this be setting up for a generational swing out of bonds? And the thing that's driving that is that all of a sudden people realize we built up all of this debt in sovereign bonds, all the government debt that we built up, and it's not the safe bet anymore. It's like, we could be seeing this year default in Greece. We could be seeing therefore a ripple effect, a default in Portugal, Ireland as well, and then lack of confidence in Spain, Italy, France, and so on. And all of a sudden, US government bonds lose their attractiveness. Maybe banks start saying, heck, we need to hold cash instead of putting it in government bonds. And there could be a generational shift kind of setting up in terms of bonds not being as attractive as they have been. If you look at what bonds have done over 30 years, I mean, they've gone from, 18% interest rates we had in the Fed, something like that in the 81, 82 kind of era, down to effectively 0 now. So, can't go negative, can for short periods of time as we've seen in Japan, but we could be seeing this kind of setting up over the next 6 or 12 months, this kind of generational change, and all of a sudden the money starts to question bonds, and we have a move against them. So just interesting times. Final little charts on this commitment of traders numbers as well, just showing this kind of weakness going on. Monthly charts, 30-year bonds, we got these kind of bearish divergent signals kind of setting up here. Go to the 5-year, less so. 5 years less kind of bearish. There is kind of more strength in the 5-year market. The 10-year though, we've got another kind of bearish divergent signal kind of gone off last month and so on. So commitment of traders is potentially, these are divergent signals, so they do take a while to kind of run out, to kind of play out. But if you back it into all the volume numbers and the cycles on the longer time frames, is it kind of setting up a bigger picture in terms of saying, we've got a generational thing kind of happening where the confidence in the bond market, sovereign debt market starts to change. So anyway, hope you're enjoying your weekend.